Hey, welcome back to the show. It's the 18th of September, Wednesday afternoon. The Fed cut rates today. Jerome Powell, what the hell are you thinking? FOMC, what the hell are you thinking? 50 basis point cut? Are you kidding me? I was wrong. You heard me the other day say 50 was not going to happen. 25 was cooked in. The Fed caved to markets. The Fed caved to the wealth effect. It's quite clear now. I've talked about this for quite some time, at least a year on my YouTube channel, and I've been talking about it behind a paywall for years. The Fed's dual mandate is stable prices and full employment. Stable prices mean inflation around 2% on a medium-term basis, and full employment means unemployment around 4 to 5%. We're there right now. We're at full employment. We're not at our inflation target. Again, housing at all-time highs, stocks at all-time highs, and the Fed goes 50 basis points. One can only conclude this is to save the wealth effect, or the Fed knows something that we don't. That's not public information. Now, I've talked on this channel before about the weakness of the labor market, even though we have reasonably good non-farm payroll data and ADP employment data in terms of the headline net job creation on a monthly basis. We have identified for some time now that there's been no full-time jobs created on a net basis, and most of the jobs that have been created over the past couple of years have been part-time jobs. There's more Americans than ever working multiple part-time jobs, and most of those jobs are going to foreign nationals. So the Fed must have some inside knowledge that we don't about the labor market, but this was a mistake. This was a mistake. Talk about preemption. Holy cow. We need a business cycle. We need recessions. We can't have unending economic growth. Markets need to clear. Prices need to adjust. Supply and demand needs to adjust. Anyway, the markets initially sold off, then rallied, and then finished the day lower. You can see the S&P 500 down 16 today to 5,618. Not bad, not far off all-time highs, 5670. You can see the NASDAQ and the Dow Jones Industrial down as well. See how the overseas markets react overnight. You can see the 10-year Treasury ticked up a bit to 3.7%. Bond markets know what we know. The Fed's going early. Our inflation problem is not over. 30-year Treasury, 4.019%. The 2-year, 3.628%. Good thing we still have it. We have a positive sloping yield curve from 2s to 10s, but remember we have an inverted yield curve from Fed funds to 2s, and then we have a little positive slope, but still that yield curve inversion is a problem for us. So the Fed went good for stocks, good for housing. No question, lowering interest rates help buyers. Prices are all-time highs, so you need that lower interest rate to be able to afford the property. About 3 or 4 months ago, mortgage rates were at 7%. Today, they came out at 6.13%. They'll move lower on the back of this rate cut. And then we look at the Fed statement, and I'm using CNBC did some nice work. I normally do this work, but in the interest of time, let's use CNBC's effort here. This is a public statement. You can see the things in red that have changed. Recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have slowed. They took away moderated. And the unemployment rate has moved up but remains low. So it remains low. It's at full employment levels of unemployment. Inflation has further progress towards the committee's 2% objective, but remains somewhat elevated. Again, you're making the case for not cutting rates here in your own statement. They took out eased over the past year, but remains somewhat elevated in the recent months. There has been some just horrible. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee has gained greater confidence that inflation is moving substantially toward 2% and judges that the risks to achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In light of taking away support, the progress on inflation and the balance of risk taking away its goals, the committee decided to lower rather than maintain the target range for the federal funds rate by 0.5 percentage point to 4.75% to 5%. Horrible. In considering any additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. They took out, the committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving substantially toward 2%. That was just their last meeting. The committee will continue to reduce its holdings of Treasury securities and agency debt and agency mortgage-backed securities. That's reducing their balance sheet. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. Returning inflation to its 2% objective, again, saying it's not there yet. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. And the rest of the statement is the same. You can read it here on the screen if you want. Not good. Not good. Michelle Bowman voted against the 50-point cut. Good. She won't go down a quarter. And then, of course, we can't forget the election. 50 basis points cut 45, 46 days before the election. Now, of course, in his press conference, Powell was asked about this, and Powell put away concerns about this because of the lag effects of monetary policy. And that's true. It takes some time for interest rate changes to impact the real economy. But the psychological effects are real. Or let's reinterpret this whole thing. The Fed sees something on the horizon that we don't yet see in terms of recessionary developments, and they're getting ahead of the curve to help the election. Remember how Biden is the president? As happens every election cycle, the Fed gets pressured. Elizabeth Warren sent a letter to Chairman Powell asking for a 75 basis point cut. Fed cuts the federal funds rate 50 basis points today to 4.75 to 5% range. More than expected. No real movement in markets yet. Think this will be a mistake. That's all I have for you right now. Always try to buy American.